The Fed is set to cut rates by 25 basis points on September 17th. Fed Chair Jerome Powell recently spoke at the Jackson Hole Symposium, and he said and gave a nod to the fact that the labor market is not as strong as they believed and actually much weaker than where they thought it was just a month ago. He also said that inflation and the impacts of the tariffs, they should be short-lived and they should be one-time price increases. And he said growth has been much weaker. 1.2% on an annualized basis if you average the first two quarters. And his bottom line is that since the Fed is in restrictive territory currently, and with the rising risks of unemployment and his baseline case on inflation and the tariff impact, that it may be appropriate for the Fed to adjust monetary policy stance. So the translation there is that he's finally acknowledging that the labor market is not as strong as they believed, like we've been saying all along, and the BLS continues to put these high numbers out there and then revise them significantly lower. And the latest jobs report appears to have changed the Fed's mind, and I think is the reason as to why they are going to shift gears and cut rates September 17th by 25 basis points. And Powell saying that they are in restrictive stance means that they're acknowledging that there's room for them to cut and still be restrictive before getting to neutral. So the bottom line, team, I think the Fed's going to cut, barring some kind of crazy data that we get out there. And that should be helpful to asset prices. But for those of you in mortgage and real estate, I think we'll see things like the 10-year and mortgage rates move lower. And they're already starting to do that in anticipation of the cut.